Hello and welcome to Property MetriX. It's Anthony here to record a very important video for first time buyers around a very key truism in investing. If you ever invest in stock markets or any type of financial markets, you have likely to come across this truism that says time in the market is better than timing the market. And I think that's a very important truism for the property markets in general too. And especially with the kind of situation we kind of see now in the UK property market, where if you look around in any city you choose, it's like Black Friday. There's just Black Friday sales everywhere. You can just do a bit of research to do look at a valuation tool in any area you want versus what houses are selling for right now. And there's just discounts abound because with the high interest rates, it's obviously scaring off some buyers and impacting buyers' affordability assessments. It's leading to lower demand for property. And as demand is lower, there's likely to be more competition among sellers to compete for that shrinking pool of available buyers. So when that happens, you see a lot of slashing of prices, sellers being open to negotiation. As we see today, there's lots of properties that if we were in a raging property market would likely be selling for 10-20% higher than they're selling for today. So the message I really want to deliver to first time buyers in the UK is take advantage of these discounts, of these opportunities that you see today, and don't wait until interest rates reduce before you get more confident to enter the market. Often the best opportunities to capitalize and to get on the ladder is opportunities like this when everyone else is a bit timid and scared and is staying away from the market. As a great investor, Warren Buffett once said, be greedy when everyone else is fearful and fearful when everyone else is greedy. And it's true for every kind of asset class investing. So for first time buyers, if you have a deposit and you can potentially enter the property market, now is the time. Because if you wait for rates to come down to say 4%, 3.5%, right now they're about sub 5% with most lenders. If you wait for rates to come down to 3.5% before you enter in the market, you could be entering into a property market where prices are 20 to 30% higher than where they are today. So where you might be saying, okay, but my mortgage cost right now might be a bit high, so I'm going to wait until monthly mortgage costs come down before I enter the market. Think about it. You might be entering the market at a point where, yes, rates are 3.5% and you may be saving 100-300% less on your monthly mortgage payments. But imagine you're spending 10, 20, 30, 40, 50,000 pounds more to buy the property because price has gone up so much. It's very likely that the benefit you're getting from a reduction in your monthly mortgage payments, if you wait for rates to come down, will be cancelled out by the increase in property prices anyway. And even if you do enter into a mortgage right now at a slightly higher rate, you can always remortgage at the end of your fixed term, whether that's 2 years or 5 years. So it's not like if you enter in right now at a 5% rate, you can't take advantage of if rates move lower in the future. And another point I want to make, who says rates will go lower in the future? Who says rates next year will go to 3.5%? I know that's the forecast from the Bank of England, but who knows? We thought we was going to be in a 0% rate environment for the next 5-10 years. We were listening to a lot of commentators say we're going to be lower for longer. Then rates went right through the roof. So who knows where rates will be next year, the year after. Yes, they're 5% now, and people are talking about going down to 4% next year, 3%. But who knows whether rates will actually get there in the end. Next year, rates could be 6%, 6.5%. Nobody knows. So the best advice I can give first-time buyers right now who have a deposit and are in a position to make a purchase is don't try to time the market. Don't try to time when rates are lower before you buy. Buy now, because spending time in the market will reward you in the long run. The people who made the most money out of property, who built up equity, because as a first-time buyer, listen, there's something I want to say, because I think one of the big mistakes a lot of first-time buyers make is they get into the wrong mindset when purchasing property. When you are purchasing property as a first-time buyer, think like an investor. Because the goal of owning property is to not get into negative equity. You always want to keep your property in positive equity, because if you're in a negative equity property, it's hard to sell. So if you ever want to like scale up to a bigger property, or you want to move homes, it's going to be very difficult. The goal as a first time buyer is to buy a property that's a secure investment. So yes, you're looking for a dream home, but you're looking for a dream home that's value to you, that one where it's, you know, it's a good purchase from a financial standpoint too. Don't just buy a property because it looks pretty, looks nice, and you fall in love with it, and it's like a financial rope around your neck. That's not a good place to be in. So buying right now, where you can get deals and discounts for dream homes and for beautiful homes, is better than buying the beautiful home later and paying 20, 30, 40, 50,000 pounds more for that home. Because as I said, you're going to put yourself in a very disadvantageous position financially if you overpay for a property. Especially, that's one of the main mistakes first time buyers make. They overpay for property. Do not make that mistake as a first time buyer. And the best way to not overpay is to buy when prices are like they are now. Buy when the markets are attractive. Buy when everyone else is scared. Because if you wait for everyone else to be jumping, clapping and running to buy property, you know, when you're trying to call an agent to get a viewing and they're saying, well, we can't do a viewing because there's 50 other people waiting to view, you don't want to buy then, because if you buy then, you're going to overpay significantly. So my advice to first time buyers is this: don't be afraid of entering the market now. This is the best time to be entering into the market. When everyone is scared is the time for you to capitalize. Don't wait for the market to be great and for, you know, rates to be low and for everybody to be saying, hey, come, buy now, because that's too late. If you wait to buy then, you are going to be making a purchase that's going to put you in a financially disadvantageous position. You probably might kick yourself for not taking advantage of these opportunities today. Another thing I should say is, right now you can potentially buy any property you want. If you wait for the market to start booming again, you might find it difficult to have the choice you have today. So don't be afraid of the high interest rate environment we're in today, and the fact that yes, monthly mortgage payments are slightly higher. That's a benefit, because you want to get in now when you have more choice. Because if you wait for rates to come down to get in, you may not have the choice you have today, and you might be buying at a much higher cost, putting yourself in a financially disadvantageous position. So capitalize on these Black Friday sales in the property market now, because the Black Friday sales may not be around for too long. I hope you enjoyed that video. I hope it gave you a lot of value, and you know, if you like more of this kind of content, tune in regularly, because I'll be providing lots of these updates and analysis going forward. Thank you for being here. Have a good evening. Take care, everyone. Catch you in the next one.